I've been muted on YouTube the whole time. Sorry, my bad, guys. It's okay. It's okay. Now I'm unmuted. My bad. They just have to lip read what I've said the whole time. My bad on that. But yeah, so SPY. Let's go back to SPY. What's it going up? It's up 0.7. Okay. All right. I am going to take off, because indicators can be deceiving, guys. So, I mean, for me, less is better. I like to use the RSI. I also like to use the EMAs and VWAP for me. If you're playing options for SPY, VWAP is crucial, I believe, for trading in the SPY. It's very reactive to VWAP, just like you say right here. Like, once we break above VWAP, we start seeing volume creep into SPY, and then if we see it drop below VWAP, you should start seeing a lot of selling appear in the actual time in sales. So VWAP can be very reactive to trading SPY, the indexes. SPY and QQQ is one that I like to play too. And right here, as you can see, I had this downtrend line on this chart, and it broke to the upside. And this is where people would probably look to buy, scalp some calls. As soon as we break this trend line, we're also breaking VWAP. And then we went up, about like maybe 1.5 points. And even if you played just that 1.5 to the upside, you probably got yourself 15, 20%. But it's dangerous, it's very dangerous. That's why I kind of would not want to focus on SPY today, because it's a dangerous beast. So I'm going to just jump away from SPY, say goodbye, and we see you next time. Let me see. You're like that. You're like that. You know what's going. You know what the futures holds. Yeah. Oh, I didn't see that. Ooh, on this right here on the RSI. All right, I'm gonna try it. Let me see. Let me draw a line, guys. This is new. We're all learning things together. Oh my Lord. Look at that, guys. Now you can draw. This is a problem this is why I liked also TradingView, because you can draw lines on the actual indicators down here. And now you can do it on Webull. They're stepping their game up. Wow. Yes, that would be nice. You can't draw a line across here? Yeah, for just automatically show up. Yeah, that would be nice. Yeah, I like TradingView, guys. TradingView. I'm on Webull right now just because a lot of members, a lot of traders like to use Webull. It's maybe easier for you to understand. That's why I'm on Webull. My favorite platform is definitely TradingView. I just can't trade on TradingView. That's why I have Webull. And I also have I have different accounts all over the place. I have Robinhood also is good for options. If you guys are interested in maybe playing options, we don't like to mention Robinhood too much around here, but they're pretty simple in understanding, to trade options. I think Robinhood is a good platform that keeps it simplified for you. So if you want to look into that, Robinhood is good for options. Ultimately, Webull does everything. You can trade from 8 a.m. on Webull, 4 a.m. on Webull to 8 p.m. In the evening. So you can trade pre-market, you can trade after hours on Webull. So I do like that as an extra bonus for this platform, because I like to trade, pre-market. I'm addicted to trading, so I'm like, let me just trade 4 a.m. in the morning. Let me wake up. Okay, so let me see what's going on. I just turn around. I look the other way at that point and sleep. Okay, so we had another one that I was watching closely is Carnival Cruise Line. We had earnings today. Carnival. Let's see what it says. Okay, Carnival post soft fourth quarter revenue, narrow. Okay, so post narrower than expected adjusted loss, but revenue missed mark. Okay, so they're bringing the losses aren't as much as previous earnings. So basically, like a softer landing, I suppose. This earnings today that was just released in the morning, they beat by 2 cents here on the EPS. The sales was 3.84, and then they missed the estimate 3.91 billion. So how did the market digest that? Well, we saw that it came down to this. I'm telling you guys, I had this line here before. I didn't just draw it before I came on live. This line was already here, and this was obviously a support level that was back, that we were looking at probably back here in 2020. Support levels can go all the way back many, many years, and it's so crazy, but these levels hold up still to this day. Like this one was from October 2020, and look where it bounced off today. That same level from 2020, we decided to come down and retest it, and then we got this huge engulfing candle pushing it to the upside. So right now we're testing that resistance level about 870. If we get through this level, then I think we could test probably around that 910 next. If the overall market pushes higher, then I believe we probably test 910 next towards this blue line right here. I'm going to put it red as resistance. This is the level that I would look at. Carnival, if it gets through 870 and holds, and we don't see a wick like this because the wick it got rejected up here. So we need to see it close the candle above this line, 870. And then push higher towards the 910 area would be the next target that I would have. As you can see, the last time Carnival came down to this level, right here, we saw it run from around this level in the sevens. Once it pushed above this level, we saw it run all the way up to $11. I'm not saying it will happen, but if you get into this trade and you just keep raising your stops up to keep you in the trade, you can probably maximize that potential to maybe 1050 again, if we continue to see volume push it higher. So Carnival for me is a good long-term swing. If you're looking for something long-term, maybe like a year plus, I think Carnival could be a great hold. They keep raising cash. Eventually, I think their business will go back to normal. We're seeing the reaction still to COVID, right? So COVID is still affecting a lot of travel businesses. So I think once we get past maybe the next 6 months, I think this can ultimately push back to retest this $11 area again. And then, maybe in the next 5 years, we can sit back up to, these levels back in the $15, $20 range again. I mean, the high before COVID was around $50. I mean, we can say it's around 43 before we saw this just landslide, right? During COVID, Carnival just had a landslide all the way down to $7. But after that, we reached 31 on the bounce. So I could definitely see potential in Carnival Cruise Line going forward, at least to probably this area again, at least to 11. I think we can probably get up to $11 to test the area. Maybe in the next 6 months, 3 to 6 months. I'm going to put a little bit further time on it because it may take a little bit of time. Like this right here, this move took like a month and a half. So if we have a slowdown in our economy, we could see some sideward action for a while, and then eventually I think we go back up to test that $11. But it could be 3-6 months, could be 9 months down the road. So I do like Carnival though. Carnival's a good one. The earnings came out. I suppose the investors took it in a positive way going forward. So definitely one to watch. As we saw it, look, it's over 870 now. we're trying to blast and hold over this line. So as long as it holds 870, I think we test this red line next, which will be around 910. So that's that one. I do like that one. How do you feel about Roku? Devastator, yeah. See, Roku's a good man. Roku's a great long-term hold for me. I know it's been on a downward trend for a little bit of time, right? Because once SPY hit that 410 and we saw that hard rejection, we've seen a lot of these tech companies, blue chip companies, just started, coming right back down again. So for me, if you build a position for Roku very slowly, the fundamental side of things, like the financial, if you look at their revenue and their growth, it's super impressive, because you can put the graph on here and you can see in 2021 their net income went from negative 17 million in 2020 to positive 242 in the year 2021. That's a 1,400% increase. So they went negative to positive, which is fantastic to look at if you're an investor trying to find something long term. And then you look at the revenue. Their revenue increased 55% from 2020 to 2021. They increased 55%. It went up about $1 billion on the actual revenue year over year there. So there's a lot of positive signs in Roku. I think once we find a bottom, this is also why I don't like, when I build a position, I'm not going 50% in on my first buy. I'm looking at support levels and I'm buying 15%. If that support decides to break down, then I'm looking at the next levels of support to maybe add a position. But also, if you're a new trader, that's a little bit riskier, playing to the downside, adding to the downside. But that's kind of what I do on some of these tech companies. If I like the fundamentals, I like where it's sitting, I'm looking to add slowly. Once we're in a reversal, say I'm buying here, I'm going to put a box right here. I'm buying my first position right here, maybe because I like this support level that it's holding right here. I'm buying my first buy at this level. It decides maybe the next day, I saw some volume, maybe I'm thinking, well, this level is going to hold. I'm going to buy a 10% buy here. Then the next day we had bad news, the overall market's coming down. It breaks this support. So my first buy here is maybe 15%. I'm like, I'm not going to buy anything until I see another level hold, right? So I'm looking at support levels. I'm saying, well, this level right here, from yesterday, it's holding up this morning, right? So I'm like, okay, well, we're seeing some buying. We're not getting these hard sell-offs in Roku like we were in the previous day. It's holding this level nicely. Maybe it's the support level from 2018, because some of the prices we're at now are 2017, 2018 levels. And I like this area, and we see some buying volume. And then we saw today maybe some buying volume holding this level and more buying this selling. Maybe I buy a position right here. And I'm like, well, I do like this level. It's holding up very well. And I buy maybe, so I'm in here 15%. Maybe I buy myself, 20% or 25%. When I build positions to the downside, it's going to be risky, but I'm only buying the first 50%, 50% of my position on a downtrend. Once I'm in 50%, I'm putting a stop in place just below that support level. Wherever I'm at, I'm going to put a stop loss in place to protect my downside from once I'm 40 to 50% in. Now, once we start uptrending, we start to see something like this. Let me bring this. So we start to see maybe it's doing this. We're seeing it create higher highs, higher lows, right? So once I see a trend reversal and, it's a confirmation that we're seeing higher highs, higher lows, this is where I'm going to add the biggest bulk of my position. I'm going to add on the reversal. Once I start seeing it, it's a clear reversal, confirmation, we're seeing higher highs, higher lows, then that's where I'm going to add my biggest position on a confirmation. That's where I'm going to add my last 50%. So it's going to bring my average down, because maybe my average is maybe 47, 46. So I'm buying it on this area, which is maybe 44, 45. And then it's going to bring down my average. And then also we're going to get into some profits pretty quickly once we see that confirmation. So, you know, when I put an alert out and it's a downtrend, don't be buying 50%, 75%, or go all in on your first buy, because if we do see some more downside, we're looking at different support levels to hold to the downside to add more. And if you're in 100%, you can't add any more. You're stuck. You're going to bring emotions into your decision making. And when you bring emotions into trading, you're going to make some quick decisions that aren't probably going to be the right ones. So that's why I always say, you know, build positions slowly. Even if you buy this 15% buy right here and it decides to fly to the upside, it doesn't matter if you're in 15%. You don't have to rush and buy 100% in on this push to the upside. You can just take your profits on the 15% that you started and go find the next play that you want to play. So, you know, always building to the downside is risky. If you don't like that risk, if you don't like to see red overall in your portfolio, wait for the confirmation to the upside and then start building your position. Wait for this trend line to break. Like if you put a downward trend right here, say like this to this, once it breaks this downward trend that it's been on, maybe there is, as a new trader, maybe right there on that break, once you start seeing it build higher and break this trend line, then maybe here is where you put your first buy. And that's obviously less risky than trying to buy down and build your position. So you can wait for a downwards trend line to break and then buy your first position on the reversal, and then put an automatic stop just below the trend line, because if it breaks down below this red line again, then you know it's probably going to find lower stock prices. So that's when you can put stop loss in. You buy your first buy here, right here on this white little box, and then automatically you can put a stop maybe right here. So there's two ways to play my alerts. You can build down a position, which it can be riskier, or you can wait for the actual true downwards trend to break, and this is probably a less riskier way to trade. You know, I've been doing this for a little while now, so I do like my strategy of building down positions. You know, 90% of the time they work out just perfectly. We all have losses, right? I'm not going to hide behind, you know, doors, say that I never had a loss. We had losses. Everyone's had losses, and everyone learns from the losses, right? You change your strategy so that you don't make that mistake again. So yeah, so there's two ways to play my alerts. You play the downwards trend and build a position, the first 50%, then add the 50% on the reversal, or you just wait for this trend to break, and then you can add maybe a bigger first buy on the trend break, and then you can start taking profit to the upside. So yeah, Roku, I do like Roku. I think that Roku, if you look at Roku, on the daily chart, this has been, just look at this. I mean, we got a bunch of humps right here, and a lot of stocks look like this on the weekly chart now. We pretty much like a double top. Look at this. I mean, this was a short stream right here. Once it got rejected to the downside, if you grab shorts, my goodness, it would have been great. So yeah, so as you can see, Roku just got smashed to pieces. So this is one that I think the bottom, like if realistically, if we just keep on trending down, I think we can probably test the mid 30s. I think we could test the mid 30s and maybe even the upper 20s if things get really bad in the overall market. So that's why I always say you can leave the biggest bulk of your ads for that reversal to the upside. But also, you know, you can, after your first buy, you can automatically put stop loss in place too. You don't have to go by what I say. If you're, you know, when you put your first buy in, you can put a stop loss in straight away too. Totally up to you based on your trading plan that you made. But to the upside at these levels, I think that the risk reward, the reward is so much outweighs, I think, the risk on Roku. That I think, if you build a position slowly down at these levels, I think the next, year, you're going to be sitting into some good profits. I think that this risk to reward makes sense. And I do like Roku. Like I said, the financials and everything looks good. So yeah, I do like Roku. I think that one could be a great long-term hold. So if I rambled there, guys. Yeah, just ramble. Yeah, I'm talking to myself, so why not? So yeah, go back to channel trading. LabVIEW is good, right? Because LabVIEW was a good one that we picked up. LabVIEW was a fantastic channel that it's been in, right? So you can see I already had this marked out from previous levels. If 650 never holds, if you're looking at that 650 level, if that holds and you see buying volume come in, you can buy on this ad right here on the 650, and you can easily aim for 7+. We see these different levels here that you can take profits at these levels. So if 650 holds, you can add into the reversal, aim for 7. And then if we really get pushed above this level of 7, then you can aim for 740. And then the top of the channel is around $8, right? So you can see it's done this many times. If 650 doesn't hold, then you look at $6. If $6 holds, then you look to add on the reversal from $6. First target will probably be 650 because it's going to be a resistance that it has to get through. And then if we get through 650, then you aim to 7, and then 7+. You just raise your stops up. But this is how simple trading can be on the swing side. You find a stock like this that has a beautiful channel and just trade the heck out of it, right? You buy down here on the reversal, you start taking profits, and then if it gets rejected up here at this $8 level, then you stop out with the remaining of your profits up here at $8, and then you let it form the channel again, and then you just rinse and repeat. And I know that, it can be very easy to be trapped into trying to play 15 different plays at once. But if you can find one that does the same thing over and over and over again, why not stick to that one trade, right? Why risk trying to trade 15 different alerts at once? If you found a gem that's in this channel, then why not just keep it simple and play that one stock over and over and over? And once it breaks, because I think LabVIEW is going to break to the upside eventually. Once it breaks to the upside, once it breaks this level, then it's going to be, you're going to see levels back in the 9s, and you're going to see levels back, it went up to $13 in August. So you're going to see, another channel form. Maybe this is the channel that forms between 8 and 950. So, try to simplify trading a little bit, better for yourself, and not stress yourself out by just trying to find a channel and trade it. That could be something that's maybe your niche in trading. You find a stock like this, and obviously you're going to find stocks like this in My Alerts, which is Alerts by Lee in the premium side. But you can easily just trade this and just do it over and over and over and over, and just keep on, obviously if it decides to break down, you just put a stop just below here. If it's $6, you're, on the reversal at $6, put a stop at maybe like 575, something like that. That's still a low risk to the reward side of the upside potential, so much higher than that little risk that you're putting out on this trade. So, I always play LabVIEW, and a lot of premium members here love playing LabVIEW as well. I'm sure you guys are in here. But you can easily just put a stop. Once we see buying volume comes in, you just automatically put your stop loss in place just below that support. So say like 575, you're buying at 605, 610. Once you see the reversal happen, you buy into that, and then you just automatically start raising. Once you start going higher, you just keep raising your stops, until eventually you stop out because it gets rejected, and you take your profits. So I hope that helps a little bit. Yeah, you guys love LabU. I love LabU. LabU is a good one, and the opposite to LabU. So if you guys are interested in LabU, you're going to follow. LabU follows XBI, right? So XBI is the ticker, which is the S&P Biotech ETF. So you see this, which is pretty nice. The actual chart's pretty nice. I drew these trend lines on here, and it's a nice trend line that it's on. Let's see if we bring it down to like here. It's better. It's obviously fine. We're finding higher highs, higher lows, and we're actually trending up slowly but surely. XBI. So when XBI is up, LabU is going to be trending up, and you got to be careful. You got to make sure you're playing it correctly, because it is actually a 3x ETF, so 3 times what XBI is doing. So that's why it's up 5.5% instead of 1 whatever percent it was. So it's 3 times the XBI. So if XBI is downtrending, you can play LabD. This is like, I'm giving you guys some secret sauce over here. The members that joined us for open house. You can, when XBI trends down, then this LabD will trend up. And you can obviously draw a channel in the LabD as well. As soon as the XBI decides to trend down, this will start trending up and start breaking these resistance levels, and you can play this channel as well. So that's why it's down 5% today. XBI is up, LabU is up 5%, LabD is down 5%. Yeah, the inverse is LabD. LabD, I'll type it in the live stream chat. So LabU, LabD. There you go. So it could be as easy as like I say, channel trading. Can be easy as that. I also added a few more other, if you guys are interested in channel trades. I also got some marijuana stocks that, they could be a little bit higher risk, but could also pay as well if they hold certain levels, right? So CGC is one that we've seen hold this $2, like it's like around 210, 215 level. And you can see on this channel, I can put it on what daily is not good. I put it on the 4 hours, even better, 4 hours. On the 4-hour chart, we can see here, it goes from, once that level held around 210, 215, we saw it push higher, right? So we saw it reach these levels of like $3, and then we saw it up to $4. This is a channel that it's trading for how long? Let's see, since July. So it's gone from 215, 213 right here precisely to $4. And then we come back down to test this level again, 215 level. And then we went right back up to $4. And then we're down at this level again. So this is one. And you can see buying is coming in today. We're up 2%. So this is one that I would be interested in trading just based on the technical analysis of the chart, right? Because you've seen automatically that it's held up this level like a champ. It's held up that $2.15 like a champ many times in the past 6 months. So right here. So what we do, we're going to watch to see if we push higher. We start forming some higher highs, higher lows. Then maybe we enter this trade. We put a stop loss just below this support. So we're protecting our downside. But the upside potential could be at least from this level, 20, 30%. So this is one I'm definitely watching going forward. If we start pushing above, let me put some fibs on here and see what we got. Let me see some fibs. I know I'm running out of time. I have 5 more minutes before Amy kicks me out. Let me see what levels we can. bring up here 12.5 and 25. So I feel like if we get through, I think if we start going a bit higher than here. So if you're looking to enter CGC, I want it to probably get above around 262. I want it to start really pushing higher. This is the level that I would like for it to break. 262, hold that level, and then maybe enter there on the break 262. As long as it holds and we close above this level, then I would add probably around 262 plus, and then aim for probably like 280 plus. And then once we start testing these levels out, and we start breaking them, then I'll just keep raising my stops up again. And then just keep raising them up until, you sell out. It decides to hit a resistance and get rejected. It's going to come back down. You're going to sell out with your profits. So this is one that I like. At this level, I think if we get over 262, you can write this down, 262, aim for like 280, 290. And then if we break through that level, then we can definitely see back over the $3 range short term again. So I do like CGC. This is Canopy Growth. I'm not really, a big fan of marijuana stocks, but this one has pretty good fundamentals. Like they have a lot of cash on hand as well. They have over 400 million in cash. They have a lot of assets. To liability is good. They only have 1.98 on the liability side. Total assets is 5.62 billion. So this is good to see. Assets are much higher than the liability. Their debt you can see that they increased their debt, but it's come down a little bit. They're probably paying off their debt some. Their actual revenue is pretty good. It's increasing from 2008. Their total revenue was 77 million. Now it's 520 million. And you can see they're in a bunch of their net income was negative at 1.74 billion. Now they're getting closer to that net positive. They're only negative 300 million now. So there's a lot of good things about Canopy Growth. I do like this one. I think this one could be a great play as long as this level holds. We can probably definitely see it in the high 2s to 3s again, probably in the next couple of weeks, if everything lines up perfectly. I'm planning to hold Twilio long term. Do you see any levels that I should give up and get out on Twilio? Basically, on Twilio, you can. After we saw this, I believe it was it earnings for this one? Let's see. Why did we drop down? Yeah. So the last drop in Twilio, TWLO, it dropped from the 70s down to $41. And then we saw it, basically had a nice basically like a dead cat bounce, you can say. It had a nice bounce from $41 up to the mid 50s. So you got yourself like 30%, pretty much like 30-40% gains if you brought it down here. So the levels that I would be looking at before I jump off of here would be probably, I would look at $44 to hold, because we've seen it bounce off these levels. If you have a bit more risk, then I would look at this level. I wouldn't want it to drop below $41 down here during earnings. So if you have a little bit more risk and you can risk a little bit more based on your trading plan, I would look at $41 for it to not drop below that level. But if you want less risk and you don't want to see it drop too much more, then $44 is what I would be looking at to hold. If it holds $44, then we can see this sideways for a while, but the company itself is pretty strong. I do like the company and the fundamentals and their business model. So I do like it. Once we start pushing higher, I think this can start pushing right back up to probably this, 60s, 70s, 80s again. Once we get clear direction on the bullish side again. So I think that as long as it holds 44, you should be good. Like I said, if you have more risk, you can risk more based on your trading plan, then 41 would be the max. Just below 41 would be my stop, would be the max stop. yeah. And I think we have Emma Jam is about to come on here in a second. Blast on in here. Hello there.